We'll move to our next session for today. It's a panel discussion. The topic of the panel is Streamlining Trade Finance and Distributed Ledger Technology. I would like to invite the moderator, Duncan Wong, CEO of Crypto BLK. Welcome on stage. Thank you. Yep.
Good afternoon, everyone. I'm Duncan. So in today's section, we are going to have this gentleman and lady over here to talk about trade finance. So let me introduce, and maybe we take a seat first. Yeah, so let me introduce everybody. So on our left is Farouk Siddiqui, the Global Head of Trade from Standard Chartered. And then we have Joshua Crooker, the blockchain DLT lead of the global commercial banking from HSBC. And then we have Mohua Baniki, the senior director of Infosys Finacle blockchain from Infosys. And finally, we have Venka Kumar, the vice president from the Kotak Mahindra Bank. So welcome, everybody. And so this topic of the panel is about trade finance. So how to use blockchain to streamline trade finance. And what do we mean by streamlining trade finance? That's also a question I would like to ask. But to get started, I would like, I know that there's quite a number of different kinds of trade finance, blockchain-based trade finance activities going on. We have a lot starting from like white paper to prototypes, proof of concept trials, live pilot runs, and so on. And each of these panelists have been doing a lot great work on DLT trade finance. So first of all, I would like to have each of you share with us about what the current activities related to blockchain trade finance you are working on, what's the background, and what's the current status. So Farouk, would you like to start first?
Sure. Thank you, Don. Thank you for inviting me for this session today. I think before I talk about technology and what specifically we are doing, we should spend a couple of minutes really talking about what are the big challenges around trade and trade finance, and how does actually technology, whatever be the underlying technology, unlock it. So if I touch on some of the big themes in the trade business, I think the big theme right now we have is that there's about approximately $1.6 trillion of unfunded trade finance globally, which really means that if you think about trade finance as an enabler to GDP, employment, financial inclusion, etc., you have a big chunk of SMEs and smaller companies who don't have access to trade finance for a variety of reasons. And approximately 60% plus of that gap is existing in our region in the Asia Pacific. So one really is this whole theme around how do you get financial inclusion going, how do you get a lot more SMEs to access trade finance. That's one big issue that we have. I think the second thing, which is really to look at what is happening within the client space, which is what is happening to customers, their own supply chains, and therefore how does technology enable or actually resolve some of the issues that they have. So if you talk to a lot of the big clients who source from, say, Asia, some of the issues around how do they reduce complexity in the supply chain, how do they look at sustainability within the supply chain, how do they create stickiness of their supply chain, how do they reduce the costs within the supply chain, is actually a very big driver of what do they do in terms of using technology as a way to unlock it. And then the third lens obviously is from a bank's perspective. If you look at any trade finance business, we typically have three specific challenges in trade. One is that the capital cost for running a trade business is prohibitive. And what that means is that given the regulatory capital that is required to support a big trade finance business, you need to be able to make that business low cost, number one. And number two is you need to ensure that any surround cost, it might be related to compliance, it might be related to AML, actually comes down dramatically for you to justify that this is a business where you can sustainably and profitably invest in. And I think those three are what I would call the big overarching themes. And within that, then if we take your specific question, certainly from our bank's perspective, there are a number of areas that, which is in the public domain that I can talk of. One is various banks are coming together to form consortiums, and these consortiums could be bank-led, it could be a technology vendor-led, it could be regulator-led. In some cases, it could be led by a client, say a shipping company who's looking to build a blockchain platform to enable access to physical information. So if you take these four-model approach on consortiums, I think a lot of the banks you will find are investing in trying to understand where does value get unlocked, either in terms of processing, which is how do you digitize paper and how do you kind of reduce turnaround time. The second really is how do you build more services which are linked to the underlying data which the platform provides you. So if you kind of assume that in trade finance, we basically provide funding, we take risk, we provide surround services. A lot of the enabling technology using these consortium will be around how do you create more surround services to complement your core offering that you've got. And the last thing which we will touch on in the context of some of the various consortium which are at play is a regulator-led consortium. And if you look at quite a few, you've got MAS in Singapore, you've got HKMA, you've got a few more regulators in Asia who are leading these platforms. Some of them are on blockchain, some are not. But there the big driver is around financial inclusion, how do you deal with trade AML, how do you, again, provide a better access to the SMEs, how do you connect the dots and keep the trading kind of philosophy alive in terms of a digital perspective. So that's what we kind of see happening in the environment.
I see. I have some follow-up questions.
Sure.
It's great. So hi everyone, it's Josh from HSBC. So I agree with a lot of those points, Farouk. There's definitely challenges in running a trade business. So maybe what I'll talk about is a little bit from a different angle, which is how do we help our clients run their trade business? So I'm also coming from the trade business side. I used to look at a lot of the products that we offer our clients and more specifically what digital solutions we offer those clients. And really what we wanted to do in technology for trade is connect our clients. But the solutions that our clients want is not just to be connected to me as their trade finance banker. They want to be connected to the entire trade world. First of all, they probably have a relationship with all of the other banks on this panel and all the other ones in the room. So it's very common to have multiple bank relationships in trade finance. That's the first thing. How do I connect to all of my finance providers? The other one is trade is more than just a loan. Trade is also booking of a shipment. It's getting insurance. It's clearing customs. So, how can we provide services around that? And you quickly realize that you really need market infrastructure. You need a network. And that's why blockchain was so exciting to me and to our institution, because here's a chance where we can build something as an industry. Of course, I could go and build a network that connects all the HSBC offices around the world, and that would help to some degree. Wouldn't even need blockchain to do that, but that doesn't solve the customer's problem. They need to connect to a much wider degree of people. So how do I build that? How do we work together? How do we collaborate? You really need a technology that matches the decentralized nature of trade, and then really that's blockchain. So it's given us a completely new opportunity to go back to saying, how can we build these networks? How can we build them in a decentralized way? And how can we provide all of those benefits to the client and to the bank, as Farouk mentioned, in a way that we haven't been able to do before? So right now what we're doing at HSBC is we're experimenting across a number of different technologies, across a number of different sort of operating models. How are we gonna build that collaboration? How are we gonna gain adoption? So we formed joint ventures. That's sort of one way of sort of coming together to build a permissioned network. You need to have a neutral entity, if you will, to build sort of a decentralized network, and a joint venture is one way of doing that. So there's the WeTrade joint venture in Europe that's doing that. We're working together with our regulators, of course, especially here in Asia, major trade hubs in China and Hong Kong and Singapore. who are very keen for their cities to continue to be trade hubs, and one way of doing that is leading the efforts in terms of blockchain, so very happy to be here. And then the other is working with large technology firms, both on the development front, like CryptoBlock, and platform companies like IBM and R3. So R3 is over 100 banks and over 200 other members. That's a great network that we can then leverage. So we're looking at building networks using that sort of partner strategy. So these are all different technologies or different operating models, but the same goal, which is to try to build some market infrastructure. There isn't going to be one network. There's going to be multiple. Trade is very big. There's lots of different sort of niches. Every different commodity or different area, different segments will have slightly different needs. So there's definitely space in the market for more than one network, but we are looking to see some consolidation as well.
Wu, please.
Yeah. So just extending on what Josh just mentioned, we at Finacle, being the product arm of the financial services, we looked at this particular pertaining problem in trade finance area, and we went about to build, and we work upon it like last 2 years. We've got a Finacle Trade Connect product, which is a production-grade product. It's across being used in 17 banks and 3 consortiums, and it is currently running 350 corporates live in production. Very specific to the consortium that is running in India, which recently won the Cellin Bank Award, is that it kind of powers 11 banks in India. We're using it for different use cases in trade finance, and empowering the banks to actually offer more financing options to their customers, which is what the end objective is for bringing trade finance use case onto blockchain. Now, what we're also working with the banks is to see as to how we build this ecosystem along with bringing in partners in logistics, insurance, and not only focusing on domestic trade, but also looking at making it a cross-border network. So there are banks who are in India who are leveraging their partners in Middle East, in Australia, and it is about connecting more trade corridors, and hence leveraging what their existing relationships are, but at the same time making the processing time very less from a trade finance use case perspective. So that's what we are currently working on, and we hope to build the networks further.
Venkat?
Hi, I'm Venkat. So we are live with Infosys Trade Connect platform. In terms of what are the interesting things which are happening in our geography is that one, we are seeing a trend wherein which larger enterprise corporates, let's take an example, a manufacturing entity, which has got a larger reach, setting up their own, digitalization process, capturing, complete supply chain over the blockchain, and wherein which all the invoices, purchase orders get captured, and they're converting themselves into a kind of a marketplace and inviting banks to lend on top of it. So this looks slightly disruptive. This is some of the trends we are seeing. And the other area what we are seeing is especially around mid-size, small-size companies. We are seeing emergence of small startups, which are basically creating a blockchain network, tapping into their ERP transactions, and again creating a kind of marketplace to enable facilitate lending from banks to some of these SME players out there. So these are some of the trends we are seeing which are emerging now. I would say pretty nascent stage, but seems quite interesting and disruptive if it turns out to be.
So apparently everybody is talking about consortium, as Farouk, you mentioned about 4 types of consortium, like regulatory-led or bank-led or even maybe a vendor or some kinds of corporate-led. And also Josh mentioned about the JV, that's also a potential approach as well. And Mohua, you also mentioned about the consortium, and Venkat, you talk about the marketplace. I've been thinking that there are so many different kinds of approaches of all this kind of consortium thing. What do you think about which one would actually come out, would be more promising? Definitely there is no definitive answer on that, but what do you think about the pros and cons, and how they can be, probably they can be interacting with each other as well? And as we can see, there are so many consortiums over there, and that definitely will have some kinds of interaction. So I would like to pick your brain about the future to see what it will go.
So I can certainly answer from from bank's perspective, but everybody's answer to that question will depend upon A, what their own strategy is, and B, what is it that they want to get out of it. I think certainly for a bank, and a lot of it is about how do you retain client stickiness, how do you retain client relevancy, how do you ensure that as far as access to that client is concerned, you continue to kind of value add over what is essentially a very commoditized product like trade finance. So if I look at the consortiums, my view is that clearly any consortium or a group or a platform is looking to build critical mass. So it's a question of which consortiums will coalesce to create that critical mass, and at this point of time, we are really in the early stages of progress. So let's take the regulatory one, because actually you already see developments that in the initial phase, it starts off as a very domestic-oriented platform, which is, I'm going to build a platform, it will only be for, say, in Singapore. But as soon as corridors start talking to each other, so we know what's happening, say, with GTCN, between Singapore and Hong Kong. We know now there are potentially other countries and regulators who are interested to kind of plug into those platforms. So I think what you will see is the evolution. Some of it may start as a very industry-led platform. So you also see certain industries. You can take commodities, you can take logistics, you can see their own blockchain forming, which is very, very industry specific, but at some stage it will intersect with the financial supply chain or the information supply chain, in which case they will start connecting. You also know that if you take, you mentioned about R3, the fact of the matter is that as banks come together, there's a piece of work which is already happening around how do you come up with putting certain standards in place. Now, will those standards be the one which will be accepted? Who knows? But I think what we are seeing is the early evolution of it. From our bank's perspective, it's about being rooted in either it's strategic to us. So if it's a strategic country, we need to be involved. With a strategic client, we need to be involved. But there needs to be a very, very clearly defined need which we are looking to satisfy. I think also the key thing which will drive a lot of this is how does it unlock more business value for the various people who are in the trade. I don't think it's only about creating connection for the sake of it. That connection needs to be monetized. So if you think through whatever data flowing through the pipes, and if we all conclude that data is going to be the new oil of trade, I would argue that access to the data, monetizing that data, collaboration on that data will create new kind of business models which may or may not exist today. So short answer is, don't know. Taking a number of bets, we'll see how it plays out.
Yeah, I'll add a few thoughts on that as well. So I think the consortiums that will get it right are the ones that can align their incentives. So the ones that can find out where the collaboration sort of starts and ends and where the competition starts and ends. That's going to be very important to your point about making sure that everyone is finding value from the solution. So I think that's going to be really important. I think we're going to need to scale them up quite quickly. To scale them up quickly, you're going to need to find some degree of concentration. So I don't think we're going to be able to sort of solve everyone's problems on day one. We may want to pick a few industries that we can sort of decide are early adopters, scale within that, and then look to grow from there. If you try to stay too broad in the early days, I think it'll be challenging to reach that scale. So we're looking at that. But obviously, I think there's also going to have to be a great deal of leadership required in the early days, because there may not be a payoff immediately. It may take some time. What we are building right now is sort of a utility. It's sort of like building Swift or building a Visa, MasterCard network, right? It's something that you have to do so that you can monetize, so that you can build innovation. But we can't drive that innovation forward. The industry has been trying to digitize for decades, right? It's not like a new thing. So what we're trying to do now is find another way we can take it up a level and then start to build the innovation solutions. And we may need to sort of delay a bit of gratitude to get there.
So one another approach what we can look at is accept the fact that we need to deal with multiple consortiums. Probably to start with, it might be a huge in number. So you have some kind of a mechanism to identify which are the consortiums you will work with. And probably there will be like, let's take an example, like you might deal with 5 consortiums, down the line you'll end up with 2. So potentially we need to look at technologically how we can work with multiple consortiums and multiple platforms and build it as part of the strategy initially itself. So since we cannot easily predict who could be the real winner, so probably there'll be 2 or 3 players who could emerge as the winner, and then we need to deal finally with multiple consortiums, how the technology, how the strategy should be behind it. Probably we need to think about it and put that in place.
Thank you. Would you like to?
Yeah. So from a technology partner perspective, right, we've built in all of these concepts into our solution, and having thought through it, we've actually made our product as DLT agnostic, because the point is that the focus now is in terms of to look at the business use cases, which is relevant from trade finance perspective rather than more on the underlying DLT. As in when the banks adopt and the governance becomes more stronger, we believe that the right underlying DLT will be accepted by the banks, and eventually it will become more in terms of DLT to DLT integrations. So what the focus is right now is that we are working with the banks in order for them to move towards production, because they've done quite a number of POCs, and what they really need to now take it is to their end customers, and we're working with them with that objective.
Thanks. So about those consortium that we mentioned, we always think about what kind of value that can be brought to our organization, and also we think about what kind of leadership that we need, just like what Josh raised. I got a question about, every time when we talk about consortium, we talk about underlying technology we need to use. Do we really need to stick to any particular technology? I would like to see your view about, say, trade finance with this topic with DLT, and then DLT we can have different kinds of enterprise technology. So what's your take? Are we going to stick to any particular technology at this moment? What will be the key factors in order to make it successful in terms of a consortium, or in terms of monetizing the whole thing? What's your view on that? Do we need to pick one right now?
I'm not a technology guy, but what I can tell you from the business side is, frankly, I don't necessarily need to understand the underlying technical aspect of it, other than trying to figure out how does it solve a real life problem. And so what I need to understand from the business is it solving a specific problem that I have? Is it solving a client problem? Is it going to help me make more money? Is it something which is strategic to where I want to go? And if that enables me, so well and good. I also think that if you kind of fast forward into the future, a lot of what we are really talking about, which is where you see business models getting disrupted, is really around how you unlock value from data. And I think if you think through the various types of technologies which either helps you to understand that, unlock it, and monetize it, whatever be that underlying technology, I think will have a very important bearing on it. I think the second principle, specifically when you think about banks who've got legacy infrastructure and who've got a lot of legacy costs that they carry, it obviously needs to be something which can be modular, which can allow you to fail fast, which can allow you to either build on something entirely new or kind of just add on without too many bells and whistles. Because the key issue which most banks face is their cost of the legacy infrastructure that they carry. I think the last lens for me from a technology perspective is also around the client lens. How does that help me understand a client issue? So if I take something else, let's take IoT as an example. And if we say that IoT allows me to understand where a good is in that supply chain and therefore helps me to create a better financing product, for me that technology might work as far as that financing is concerned. So I think it will depend on situations. It will depend upon what your drivers are, and it will depend on where you are in your own journey around the infrastructure legacy that you carry.
Just a few points to add. So I think it'll become more clear in the coming years. I think it's too early to say, is the short answer. But I think once we have a solution that is in production, that is starting to scale, the math will change. So if you're a bank and you're not involved in blockchain and you see this thing out there, it's no longer, okay, I'm going to go build my own blockchain solution for trade. It's how do I become a part of that one? And that's where we're going to start to see the technology sort of mature, and then you start to see a bit of more consensus around what technologies we're going to use for what use cases. So it's sort of a race, if you will, for the technology providers to make sure that they're ready to go and that they support the solutions that add the most value to start scaling as fast as they can so that you start to have those discussions. And it's no longer, I'm going to go build my own, but you get more value by just joining the ones that are growing the fastest and scaling the best. So that's what I see happening over the next few years.
See, I see two kind of technology risks. Typically, the consortium decides what the underlying platform to be used. And usually, since it's in the early stage, the number of version changes will be very high, right? So the first risk is version compatibility. So whenever you're upgrading a version, it should be compatible. Second, for certain reasons, the platform, whatever you have chosen, seems to be turned out to be wrong. Then I need to choose a different platform halfway through, which is even much more painful job out there. One approach, what you can look at is create a kind of an abstraction layer, which abstracts the backend technology per se, and then that abstraction layer gives you the flexibility in terms of adapting these kind of risks, how it should be done. So that's one approach you can look at.
So just to extend to what Farooq just mentioned, right, when we actually are looking at implementation of the Finacle Trade Connect, what we are basically focusing on is to be able to give the option to the banks to be able to integrate into their legacy systems. Because we are not looking at replacing any of the legacy system at this point of time. We basically are seeing in terms of how you are offering agility to entire process. And that's been one of the key principles that we've been working on. So we've kept our product DLT agnostic, as well as providing a framework where integration can be easily done. And you can offer better services to your end customer, which is basically your corporates and importers, exporters, all of them who are a part of the supply chain itself.
Thanks. So actually, while the panelists were talking about the technology and also the future, I was actually thinking that last year I was on this very stage talking about the challenges of deploying blockchain applications for financial services industry. And I list out like 10 different kinds of challenges because I'm a tech guy, so I also talk about a lot of technology. But this year, I would like to ask the panelists about the challenges that you think just for the trade finance, the blockchain-based trade finance, or the trade finance digitization, I mean digital transformation, all those aspects, what would be the challenges, not limited to technology? It could be, to my opinion, nowadays or by today, I don't think technology is the main challenge for the trade finance, but there are some challenges that we actually are facing and need to tackle. So today, if I ask this question to each of our distinguished panelists, I would like to hear from you, like what will be the most challenging part for making this DLT-based trade finance successful in the coming maybe few years, 2 to 3 years?
All right, let me have an initial shot at this. I think the first one is which bets to make. So there's clearly so much happening locally, globally, in different markets, in different industries. I think different players, depending on where you are, you can't possibly be doing everything. So you need to kind of root whatever you are doing on the back of your strategy or your focus or your business model. So the first challenge, I think, is actually deciding which horses to bet on. And even within that, what role do you want to play? In some cases, you will absolutely need to play a leadership role in terms of shaping the outcome. In some cases, you might just be a passive participant who's plugging into a conversation which is already rich in content. In some cases, it's also going to be about ensuring that there are no unintended consequences of what is being done. Because you might think, for instance, that you're working on something which will make, say, a certain AML mandatory, but what's the downstream consequences of banks being able to do it, as an example. So one will be the choices to be made. And the second is that how do you ensure that you are in a position to be both compete and collaborate. And I think, when you think about from a bank's perspective, and Josh mentioned this, that at one level, clearly we need to collaborate. But it doesn't come very easily to organizations who've been traditionally thinking about it's a win to me, it's a loss to you kind of stuff. So it's really about, if you are looking to create foundational infrastructure, which is what DLT is, it's really a lot about saying that you've got to keep that while you definitely will compete, but at the same time, you need to bring a lot more collaboration culture into the way you think and visualize. Because, for instance, a lot of what the technology vendors are doing, I think banks will need to be more humble about acknowledging that what they might be providing as solutions may be much more user-friendly versus what your legacy infrastructure throws out. So I think that would be the second piece. Then you come to, obviously, there are 3-4 other things when you talk about the whole concept of digital islands, you talk about legal standards, you talk about things which is it recognized by the rule of law? And is your pace of standardization of standards or legal regulations keeping up with the pace at which technology is proceeding? I think what we are seeing is it is going into an era where a lot of the supporting infrastructure, which I would call the law of the land and standards which are required to kind of make things interoperable, are still not in place. So some of those underlying codes will need to be in place to make this thing function. So I think those would be what I would call some of the key challenges.
I got one. Yeah, I think there's definitely going to be a long list of challenges. We won't make this too much of a downer. But it was spoke about earlier in terms of how some of the more public blockchains are sometimes in production, and yet we haven't seen a lot of enterprise blockchains get there yet. And it's interesting to think about that. Why? That person was talking about the collaboration of developers in terms of the whole open source model. It's more of a natural state to have more of that collaboration, where in the more enterprise business world, the more natural state is competition, and collaboration comes a little bit more difficult. So I think moving away from that and starting to become a little more collaborative, which the industry has done to some degree, is good. We'll have to continue that and make sure that we define very clearly where those lines are drawn. I think continuing to get that support will be important from the developer community. So it's going to be very important that we can continue to build these things. It's also going to be important that we have internal IT expertise. The nature of these legacy systems, cannot be sort of undermined. They're extremely complex. You're only going to get value in a lot of ways of finding true integration. So working with platform providers like Infosys, et cetera, is going to be very important to making sure that we can find that value and that this isn't all for naught. But those, I think, are the big ones, is making sure we continue with the collaboration and that we get the integration right. And maybe the last thing I'll say is that, I mentioned it earlier about making sure that you design your platform in a way that it's easier to join than create a competing solution. That's sometimes easier said than done, especially if we create these consortiums where there's sort of tiered membership. So we say, if you're one of the first 4 banks, you're a tier 1 member, and then tier 2, and then egos get involved, right? People say, I want to be tier 1, so I'm going to go create my own thing. So again, making sure that we get it right, and it goes beyond banks. It's governments and regulators and everything else too. Making sure that we understand that this needs to be cross-border, this needs to be a global solution, and we're going to have to work together to get that.
From our perspective, I think it's very important the banks get a clarity in terms of the transformation initiatives that they're going to be involved in. There's a lot happening, and everything seems to sometimes give the same kind of value when it is around certain use cases, like people are working on big data, AI, and they're also looking at data being utilized from what you're doing on blockchain. It's very important that the banks stay invested in some of the use cases that they are working on, because many times the path is not seen in terms of what's happening from POC to production. So that's one of the things that we believe that is very important, that they continue to stay invested into the entire process. The other aspect that we also see is the collaboration that is required between the technology platforms itself, right? There are different consortium-led platforms like for Finacle Trade Connect itself. And that is where all of them have to get connected in terms of working together and providing better outcomes to the banks itself. From the market perspective, there are markets where there is a lot of physical paper documents still being used, and that is one of the reasons why the end customers sometimes question why they should move from the traditional trade finance systems that is already there, the legacy systems, to blockchain, because some of the markets are yet to move to digital documents from physical documents. So that's one of the key challenges.
Since the future seems to be dealing with multiple consortiums, and each of this consortium will have their own technology side, process side, business model side. Now from a bank, we'll be dealing with multiple such consortiums. The challenges in terms of handling these complexities. This is what a larger challenge I would feel from
Thank you. I see. So before I open up to the floor for more questions, I have one more question. Actually, it's like a follow-up of Muhar's mentioned about the technology like blockchain together with maybe AI or big data analytic in the future. I'm wondering, for example, right now we are just talking about streamlining the trade finance with DLT. What's more that we can do by using DLT, and maybe not just DLT, and maybe including big data or a set of technologies? What enabled us to do more to create some kinds of value to the trade finance industry down the road? Yeah.
Sure. Maybe
Yeah.
first I have a mic. So I think there's a lot of things that we can do to add value. I think once that market infrastructure is in place, and I think it's going to be very exciting to look at how we can provide really the core functions of trade finance, which is looking at working capital, risk mitigation, facilitation of trade, to a wider degree of people, so that trade gap that we've spoken about, and providing things that reduce barriers to trade. We talk about free trade agreements, and there's lots of bad news lately about trade wars and things like that. But a barrier to trade can be friction, it can be paperwork, it can be process, it can be access. So creating something that's much more modern, that's easier to access, that's easier to understand, where there's more tools available, there's more risk mitigation available, and there's more working capital available, I think is a win for global trade. And I think that's sort of the end goal, and making sure that we can get there through providing these tools in a much more modern way.
On the customer experience side, typically AI has a larger role to play. For example, on onboarding a merchant, you want to reduce the time. You may be able to use OCRs. On the AML side, fraud side, I'll give you an example where I came across recently, in which invoice creation is done through a chatbot for a customer segment who may not be technologically good at it. So a customer experience can be largely enhanced with using AI along with the blockchain. So complete end-to-end, you can improve a customer experience largely with some of these technologies out there.
If I were to just build on a couple of points, I think number one is, how do you unlock that $1.5 trillion opportunity, number one? Because that is a clear and present opportunity. And the second, if you look at trade finance revenue pools globally, give or take, estimates are that all banks put together make something in the region of close to $50 billion on trade finance. And give or take, depending on how fast you forecast GDP and trade growth to happen, it'll grow between 5 and 10%. However, when you think about convergence, and in our case, it's about convergence of physical, information, and financial, to create more opportunities, I think is where I would probably look at how technology enables that. Because, to Josh's point that he made earlier, effectively technology is enabling you to converge the financial, physical, and the information piece. And to my mind, that unlocks different business streams which are not today physically present. So if you think about some of the big platform companies who started off with a physical supply chain buy and sell business, but they are graduating increasingly towards financial products on the back of the fact that they have been able to use technology very successfully to create that convergence. So I think the second piece I would probably say is that how technology enables in the financial sector to really drive convergence is the second opportunity. The third thing which I'll touch on, which I think you briefly mentioned, is that there are certain, what I call inherent risks within this business. So you mentioned fraud, you mentioned AML, there's sanctions, and there's a whole industry now which supports all of this. Again, as we look at themes around financial inclusion, as we look at themes around ensuring that we regulate these businesses appropriately, technology has a massive role to play, whether you use AI on big data or what have you, because that helps make the whole piece quite a lot safer.
Thank you. Sorry. Any other Okay, thank you. So maybe we open up the questions to the floor. Anyone want to ask some questions to our panelists?
Yeah, it's fine. So I had a question regarding your approach to adopting these DLT solutions for your businesses, right? So do you do any sort of comparison or cost-benefit analysis against traditional databases against adopting a blockchain solution before you actually tread this path, or is it more on straight on experimentation POC side?
Sure. So the process that I go through normally is what is the network requirement. If I'm looking to just connect to my customer and provide a digital solution or connect them to a few service providers, there's no need for blockchain. I see blockchain as a network solution, as a decentralized network solution, where you have a wide variety of participants, where there are, I don't want to use the word trust, but there's different incentives involved in that transaction, and putting them onto a network where it isn't owned by any one of them, but they all agree as to what's happening in that transaction, and they can have that visibility and they can have that transparency. That's where we like to use blockchain.
No, I think he's answering.
Hi.
Yeah, please.
I have a question about essentially the role of blockchain for trade finance in terms from the finance side. So we all know that there is a need to deploy money, and there's also over liquidity in some markets when it comes to financial institutions. So how does blockchain bridge the gap wherein we all know that SMEs need this funding and banks have money? In what aspects in that whole process is blockchain critical to make it more acceptable for financial institutions to buy invoices or movable assets?
So I think if you look at a client's ecosystem, what you are trying to understand is from bank's perspective is specifically for the smaller SME players, how do you take risks on them? And the risk means how do I understand the credit risk? But more importantly, in many of the emerging markets, financials and all are either not available or the quality is suspect. But in many cases, we also recognize that there's a history of a trading relationship which exists between, say, a buyer and a supplier, and that history can tell you about what's been the performance track record, what's been the rejects, how many orders has he got, how many time orders have been amended. Now that information which exists about the trading flow, which you can argue if I have that available on some permission database, will allow us to take decisions on the true risk of those SMEs very differently. Because part of the reason why a lot of SMEs do not get access to financing is about the fact that most banks, whether it's a foreign bank or a local bank, don't actually understand that risks and are only looking at a financial to judge the value of that risk. So if I look purely at financial and I don't look at that trading history, I don't understand the stickiness of that supplier in a company's supply chain, I don't actually have a holistic view of the risk. What a network impact does is that it allows me to understand that risk far more holistically than how I understand it today.
Any other questions over there?
Thank you. I have a question with regards to the regulatory frameworks, and to Mr. Siddiqui, you just mentioned that some of the regulatory stuff is still not in place, especially with regards to how interoperable these new technologies are with the existing frameworks. What are some of the things that the regulators need to sort out for this to take off in a big way? Thank you.
I guess I'll have a shot and you can give your perspective. I think if you look at a great example is what's happening here in Singapore, right? I think if you have a regulator who's able to bring all the parties, it's just not the banks, it's got all the people who touch a client's supply chain together to try and understand what would be the enabling laws of the land that you require to make it happen. So whether it is around, is a particular document legally acceptable, or how do you have a particular clause which allows you to understand what risks you take. So I think number one is, I would take an example of some of the regulators in Asia who are trying to build this enabling framework. That to me is number one. Second, I would say there are a number of bodies. So if you know, in trade, you've got the ICC, and ICC is doing a fair amount of work in the context of digitization to understand how do you actually have enabling rules to allow for taking decisions based on looking at something digitally. Similarly, you've got advocacy group, and banks are certainly part of it, like the BAFT, for instance, which is also about advocating what are some of the standards that we need to go after. So I think it will boil down into one, in terms of, I think the smarter regulators know that this is required to enable trades, and quite a few of them are already doing it and joining hands. Number two is the role which things like the ICC and other forums play in creating that standard. And number three would be what some of the advocacy groups which understand that the way you create standards will allow the whole interfacing and interoperability to work far better.
Yeah, I think that's good. And I'll take an optimist view after the last discussion from, sorry, I forget who the last discussion was from. Linklaters, thank you, Linklaters was very good. But it was talking about some of these challenges that they're having, the token community with regulations, and saying we're looking for regulations, it's unclear. As banks, we actually have a bit of a step up, if you will, because I'm in 51 countries, and I have relationships, and I have experts that understand the regulations in those countries, and more importantly, have relationships with those regulators. And everyone's looking for a good news story. Everyone's looking for something that we can work with the regulators on to solve financial crime, to provide more access to working capital, or these types of tools. So I think it's something that banks can actually do to actually help provide that regulatory framework that's going to be required. And a lot of times, you may not need a strong regulator support for these projects, and sometimes it's the exact same product or the underlying solution we're providing. It's just a sort of a new channel or a new sort of digital solution that wraps around that product. But having that discussion and making that clear so that we get the sort of, the all clear, if you will, from the regulator to make all the other banks and the corporates in that region comfortable, I think is going to be really important. So, utilizing the fact that we are global networks to actually use those relationships to move this ahead, I think is definitely a good way to go.
We probably would like to take maybe one more question from the floor. Anyone would like to ask the last question before we finish this section?
Hi there, I'll do one. Okay, so from what I understand, most of the time you guys have been talking about using distributed ledgers or blockchains to pass data about trade around the world to the correct parties and stuff. And of course, Corda makes sense for that. To what extent are you considering the actual payments and loans and I guess the transaction, by transaction I mean the financing, the money. So are you thinking of putting like cash on ledgers as well to make things much more efficient, or are you still thinking about using traditional rails to do the settlements and the payments and the loans and the drawdowns and all of that kind of stuff? Where are you on your thinking of that?
I think if you take the whole disruption which is happening around payments, so it starts with the B2C's part, and increasingly whether you see Ripple or you see any of the other alternating kind of, and then evolving into different types of crypto. So I think from our perspective, it's about keeping an eye out on that. Clearly, if you think through some of the disruption which is happening in the payment space, it's primarily been on the smaller ticket domestic piece, but now we see the next phase coming cross-border. And a lot of trade we do is cross-border. So and obviously the values are pretty significant. So as those platforms kind of appear to be able to deal with a real time, but to do it in large ticket values, not for small ticket B2C only, I think then you can start drawing the connections and join the dots. So we are keeping quite a close eye out on this.
And could you just Could you just help? So what's the difference between a large value payment and a small value payment? Is just the size of the field. It's the number of zeros. So
Yeah.
what is it that's preventing? What is it that's preventing the big tickets from moving?
Okay, so my view is that so for any large ticket payments move, which means that there's an underlying liquidity. There's some real money which needs to be moved from X to Y. And it's far easier if you look at various pieces happening on the B2C side. It's far easier to do it for a small ticket ones which don't create all of the liquidity pieces. But the moment I start moving $1 billion trade, which means I need to have physical liquidity available to satisfy that payment, that's where I think we have those challenges, which I'm sure the industry will overcome at some stage.
Yeah, I'll add HSBC's perspective. So yes, we're very interested, but I'd go back to the Walmart example with the mangoes, going from a process that used to take a week to 2 seconds. So I think we're looking at some of these processes right now that are very, very paper-based. They are taking a week. Let's try to get that down to sort of 24 hours, a few hours, and finally to a few seconds. And that's a huge delta of change. The payment, it works pretty well today. Obviously, it's not great. It might take, T+1, T+2, and if we can get to a 24/7 RTGS system, fantastic. That's great, and it saves that last mile, sort of that last mile delivery, if you will. So I think we're going to get there, and we're obviously working here in Singapore with the MAS on Ubin, and I think trade is a great use case for that, saying when do you have a cross-border payment? When there's a trade involved. So I think definitely those pieces will start to come together, but we'll also need to get the big currencies. Singapore dollars are great, but I need US dollars on Ledger. So let's work on that as well. So back to you.
Thank you. Thank you very much for those comments.
So thank you very much. This one is really a very insightful discussion. I would like to take the opportunity to thank all our panelists for their great insight and also their time. And also thanks for the audience for these great questions. Definitely we have a lot of follow-up questions for the panelists during the break. So thank you very much.